So today we want to focus on understanding when we talk about working capital, what are we really, talking about? And how this course helps you is to be able to give you skills that will help you to assess the short-term business health of your business. So if I was to ask you, how would you assess your business in terms of your ability, your strength and capability to run the business in the short term? Then your answer would be linked to the discussions that we're going to have today. So this is about giving you the ability to be able to convert your assets into cash quickly so that you can use them. And this is really important, for you, because a business that doesn't have cash to run encounters some serious threats. Another help that this course gives you is it helps you to improve your business's credit profile. What do I mean? When you train your business to generate funds internally, that means that you're able to pay your debts on time. And when you're able to pay your debts on time, it enhances the reputation of your business. Out there in the market, we know you as a business person who honors and keeps their commitments, you pay and so on. Now, this course is also about helping you so that you can increase your return on investment. When you find yourself, and this is a conversation that we've been having from the very first course about managing your business cash flows. So if you have extra cash, instead of just letting it sit in the bank, there are options where you can allow your money to work for you. And that's what we're going to look at. So let's start by defining, let's start by looking at some sources of financing. When we talk about sources of financing, what do we really mean? So according to that activity, I would like you to kindly go to the chat box. And in the chat box, please tell us, where does your business get financing from? You're running the business, you reach a point where you need some kind of money. Where do you get it from? We hear that you're getting money from your savings, from friends, families, well-wishers, and also from the banks and so on. Now, usually, there's a reason why we access financing from different sources. And the guiding, consideration there is the cost of the borrowing. So how this course helps you is to open your eyes to see that there are resources, cheaper resources that you can use for running your business, which you can generate internally and cut down the cost of doing business so that you only borrow as and when you need to do so. So let's then start off by defining working capital. Now, when we talk about working capital, as you can see there on your screen, this is the capital of your business, which is used in the day-to-day trading operations. Trading operations, we mean buying and selling. So that capital, when we talk about capital, it is the wealth it's actually your wealth in the form of money or in the form of assets, So this is the ability of your business to utilize that capital, that wealth, so that you can run your business. And then we say that it is calculated as current assets less current liabilities. And because we are in session 5 of our series of webinars in the financial literacy program, we know that you know what current assets are and current liabilities, and we're going to revisit that. So why is working capital important? Working capital is important because it helps you to have a smooth flow of operations in your business. You don't want to reach a place where pesa inakatika, because pesa ikikatika, that means that your business cannot flow smoothly. Working capital is also important because it gives you access to cash. You're telling me, I'm able to get money from my friends, relatives, well wishers, and so on. This course is about helping you to see that you can actually access money when you have that, awareness that there is an internal resource, internal wealth and capital, which you can use. Now, working capital, as we've said, it improves your credit profile, because you don't get to a point where you're not able to pay your suppliers, you're not able to pay your staff like Mshindi and so on. Working capital presents investment opportunities for you. So you find yourself in a situation where you have excess cash. What stops you from putting it in a short-term investment account? And then as you work very hard, to keep your business up and running, guess what? Your cash is also working for you and making a return for you. And then and registering a return for you. And then lastly, working capital is important because it helps you as a business person to plan, to make decisions, and to make commitments confidently. So if you're in a situation where you know that you need to pay your key supplier like Mshindi by next month, you know that you're very confident. Maybe perhaps you have a short-term, investment which matures next month. So when you're making that commitment, you are 100 or 1000% sure that your business will be able to generate that money, and you'll be able to pay your key supplier, and you'll maintain your reputation, and you're good to go. So that's why we're taking the time to discuss this. And this is our picture and our vision for your businesses, that you'll be able to operate smoothly, you'll be able to access cash, improve your credit rating, and all those things that you see on the screen. Remember, from our definition, we said that how to calculate the formula for working capital is working capital is equals to current assets minus current liabilities. Now, I have put some icons there so that you can remember. When somebody tells you what is working capital, you remember that icon there, and that icon shows you that working capital is a resource. It is your ability as a business kuzungusha pesa. You're rotating the flow of cash in your business. So that's what we refer to as working capital from that symbol. Then you can see their current assets. So when you hear somebody talking about current assets, you know that these are assets, these are resources I have, which I can quickly change into cash. I can convert them into cash quickly. So that's why I've put that symbol there. And then also you have your current liabilities. We say whenever you think about a current liability, always remember that this is like a bomb you're carrying on top of your head. So how you manage those obligations is very, very important. So that is just to help you to get a visual so that you can remember. There are those assets that your business is able, those are assets that can reasonably be expected to be converted into cash in the shortest time possible within the year. So I see there people talking about liquid assets. That's what we're talking about. Just a clarification, Grace, I see you're saying pending payment. That is in a different category, which is what we're going to look at shortly. So I can see, Jimmy, where our participants are they are running ahead because I wanted to ask you, now that we understand what current assets are, please give me examples. But I can see that you're giving us examples. We see their stock. We see there, I'm looking at my chat box. You've actually given us examples of what these current assets are, cash at bank and so on. So I totally agree with you. You have some cash somewhere. These days, digital, solutions are, something that we are so conversant with. We do our businesses, we have, we make money, we allow our customers to pay through M-Pesa. So you have that money in M-Pesa, in your bank account. Absolutely. That is current, it's a current asset. It's a current asset. You have those securities that you can quickly change into cash with maybe a period of 3 months, 12 months, and so on. Those are current assets. Debtors, you sell on credit, and with the understanding that your customer will pay you within an agreed period of time. That is an asset for you. And you've talked about stocks. So thank you so much for that. And let's then cross over to current liabilities. My question to you is, what are current liabilities? So let's then cross over. I'm satisfied that we are all reading from the same page. So Grace, just take note that pending bills actually falls into these categories: creditors, short-term payables. Mtu anakulend pesa kwa biashara, and then you agree with them that you'll pay after 3 months. And you write a note, a promissory note, and you commit yourself. That's what we would refer to as short-term payables. And then you have those bills from Kenya Power, from Safaricom, from wherever, which you haven't paid. You need to pay them within the short term. So those are examples. Your staff who are working for you, those are more examples of current liabilities. That's amazing. So now let's look at some components, the key components of working capital. That's what we want to look at. And so in front of you, I'm going to put up some symbols or some icons of what we consider to be key components of working capital. Listen to the instructions carefully. Do not write the answer in the chat box, okay? Don't write the answer in the chat box. You know what the answer is. When I finish showing you these symbols, Jimmy is gonna run a poll and you will select the right answer. So we're gonna give you options there and you will select the right answer. So that there is the first symbol of a component of working capital. So when you see that, what comes to your mind? And then secondly, there's another symbol there. And then thirdly, there's another symbol there. Let's just take another look at those icons. I think we all agree that the first one is stock. When you see that, you know we're talking about stock, and stock is a very important component of working capital. Let's go to the second icon, because this is where the confusion was coming in. In that icon, you can see that there's a hand that is holding money there. There's a hand that's holding money there. Now, I think the question is, whose hand is that? And that the owner of that hand is actually your customer. Our businesses have been poised in the marketplace to offer solutions in terms of products and services to a customer who is in need of them outside there. And in the ordinary course of trying to sell, to offer these solutions, whether they are products or services, I saw some of you are saying, I'm in healthcare, I'm in photography, counseling, psychology, and all that. Ukweli wa mambo is that credit or trade credit is a normal part of doing business. You will allow certain customers to take away, your goods, or to enjoy your services without them having pay, without requiring that they pay cash on the spot. You allow them to enjoy those services, or you allow them to take away those goods with the understanding that they are going to pay you later. So that person who is gonna pay you later is the one who is holding the hand there in the icon, and that person is your customer. And that person is who we refer to as a debtor. That is a debtor. So they have your cash for goods and services that you have already sold. And that other hand that's waiting to receive the money is actually your hand. And then the last icon, this is who we refer to now as creditors. For you in your business, you need to know that anyone whom you have not paid you need to pay them, but you have not paid, the law is on their side to compel you to actually pay them in full.